Well, here we are, as promised, back with the latest news brought to you by Mainstream Cryptos. My name is Abby, and if you are new to the channel, maybe you've just stumbled across a video. Mainstream Cryptos is a crypto-themed channel where we bring you a ton of content related to crypto investing, tutorials on how to invest wisely, trading. We explain different crypto concepts like what is blockchain, what is a meme coin, and so much more. Plus, every week we run a newscast where I bring you up to date and keep you informed on the hottest developments in crypto across the globe. That is where you are today. Thank you for joining us. Let's get stuck in. This week's 15 most important crypto updates. First up, number 1. We actually have quite a few developments in terms of Ripple to look at this week. This one, Ripple CTO ends speculation about a 10 billion XRP buyback. That is a recent rumor that's been circulating. David Schwartz, the chief technology officer of Ripple and one of the original architects of XRP Ledger, has addressed the recent rumors surrounding Ripple's alleged plan to buy back 10 billion XRP tokens, which is equivalent to 10% of the token's total supply and under current price worth $5 billion US. In a recent tweet, Schwartz clarified the situation, stating that while Ripple does engage in XRP purchases, he was not aware of any specific buyback plans at this time. Moreover, he highlighted that there was no official source supporting these rumors, and then you can see his tweet, "We do sometimes buy XRP, but I don't know of anything specific that this could be referring to." The rumors appeared a day earlier when the dubious news portal Crypto Alert released an article directly stating it as fact. Despite the questionable source and unconfirmed information, the rumor quickly gained traction in the XRP community with many prominent voices commenting on it. However, this was all blowing up over nothing. That just goes to say be careful what you buy into, especially if there is no data to support that. Hard data, that is. On to piece of news number 2. Let's take a look at what's happening in the world of meme coins. PEPE outperforms Shiba Inu and Dogecoin in trading volume. PEPE, a relatively unknown cryptocurrency, has seen a dramatic surge in trading volume over the past 24 hours, outperforming both Shiba Inu and Dogecoin. Despite a dip in its price of 5.8%, PEPE's 24-hour trading volume reached a staggering $281.3 million. The meme-inspired digital assets market capitalization sits at $631 million, showing significant growth over the past week. Compared to the more popular meme cryptocurrencies, Dogecoin and Shiba Inu, PEPE's trading volume has significantly exceeded expectations. The meme coin is up 64% over the past week alone. This gain does come alongside similar gains when it comes to Bitcoin and Ethereum and other major altcoins. So, not as surprising as if it were an isolated event. However, as mentioned, the gains do exceed expectations. Piece of news number 3. Litecoin's mining difficulty keeps on hitting new highs. Litecoin is seeing an uptick in its mining difficulty, reaching a value of 26.38 million at block 2,498,134. This figure reflects an increase of 3.38% over the last 24 hours, indicating a growing challenge for miners to discover new blocks and reap the rewards that come with them. Mining difficulty, as its name suggests, quantifies the level of difficulty miners encounter when trying to mine new blocks in a cryptocurrency's blockchain. When mining, participants use powerful computers to solve complex mathematical problems. The solution, or hash, must be below a specific target for a new block to be created, and for the miner to receive their reward in cryptocurrency. This recent development in Litecoin mirrors a broader trend in the crypto mining landscape. Bitcoin, the original cryptocurrency, has also recently seen a surge in mining difficulty. Is this a good or a bad thing? Increased mining difficulty suggests more participants are mining, thereby contributing to the decentralization and security of the network. This trend also helps to control the rate of new coin issuance, an important factor in managing the supply of a cryptocurrency, since it exists on blockchain and is decentralized. Piece of news number 4. Japan's banking giant MUFG plans to issue stablecoins, according to Bloomberg. MUFG, the biggest bank in Japan, is seeking an opportunity to begin issuing stablecoins backed by various global fiat currencies, including US dollars, on its own blockchain platform called Progmat. Mitsubishi UFJ Financial Group Incorporated has begun negotiations with firms that are minting popular stablecoins used around the world regarding issuing these stablecoins in Japan as well through Progmat. On June the 1st, the local government passed a law that has made Japanese licensed banks and licensed money transfer companies free to issue digital currencies. Overall, this law has basically allowed both issuers and users to use stablecoins and to feel safe while doing so, according to MUFG's top executive Tatsuya Saito. Still, he did not name any parties that the bank has been negotiating with about stablecoin emittance. Number 5. Dash completes its halving, with Litecoin and Bitcoin coming up next. Dash is a payments-focused peer-to-peer cryptocurrency forked out of the Bitcoin source code, and it has just completed its halving. The halving was completed at block height 1,892,161, and the current block reward is 2.3097 Dash. On the Dash blockchain, the block reward for miners is halved about every 840,000 blocks, or every 4 years. Here's the tweet announcing the completion of the halving. According to OKLink, the next Litecoin halving event will take place in around 40 days, while the Bitcoin halving will take place in 308 days. Number 6. $1 billion in Doge are grabbed by Robinhood customers, and holdings show an 11.16% rise. Recently, at Doge Whale Alert Wallet Tracker shared that the total Doge holdings stored by the popular Robinhood trading app on behalf of its clients has seen a massive increase of more than 17%. According to the tweet, the total Doge stash held by Robinhood has increased by 11.16% compared to the end of May. Here's the Dogecoin Whale Alert. The current total combined amount of Dogecoin held by Robinhood app on behalf of its investors is 38,317,905,469 Doge. Number 7. After BlackRock, 2 more asset managers filed to launch a Bitcoin ETF in the United States. Invesco, an American investment company with over $1.4 trillion of assets under management, reactivated its attempts to launch a Bitcoin spot exchange-traded fund, the ETF, in the United States. WisdomTree, another US finance giant, submitted a similar application to the SEC. The latest efforts come a few days after the world's largest asset manager filed with the securities regulator to introduce a Bitcoin spot ETF in the States. Although the investment company is still waiting for a positive nod from the SEC, it has already introduced a product in Europe. The Invesco Physical Bitcoin ETN came into existence after a collaboration with Deutsche Börse and provides physically secured access to Bitcoin's performance, albeit a derivative. On the other hand, what are WisdomTree's efforts? The New York-based entity also sought permission from the SEC to launch a Bitcoin spot ETF. Should it obtain regulatory approval, the fund will be listed on the Cboe BZX exchange under the ticker BTCW. Interesting to note there that WisdomTree has previously attempted to introduce a Bitcoin ETF in the States and has been rejected by the SEC, so it will be interesting to note whether this happens again or whether the watchdog allows the development to go ahead. In any case, moving on to number 8. Mercado Bitcoin plans to support Brazil's CBDC efforts. Mercado Bitcoin, the largest cryptocurrency exchange in Brazil, will reportedly participate in the country's pilot project to launch a digital real. The central bank intends to issue such a financial product in 2024. As reported by a local media outlet, Banco Central do Brasil has authorized Mercado Bitcoin to take part in the CBDC development. Speaking on the matter was Fabricio Tota, Director of New Business at the exchange. He said, "Our participation validates the central bank's intention to bring innovation to the financial system with those who had already been working with this technology and not just with the incumbents who appropriated it." Other project participants include well-known companies such as the payment processing giant MasterCard, the financial software fintech Sinqia, brokerage firm Genial, and others. The central bank aims to release a CBDC next year, And according to the initial plan, the monetary product will be a blockchain-based instrument that supports retail transactions and is backed by customer bank deposits. Piece of news number 9. According to Kaiser, Ripple is a Ponzi scheme and the SEC will kill XRP. Wow, what a lovely start to this article. The prominent Bitcoin proponent and permeable Max Kaiser has taken to Twitter to bash Ripple once again. Kaiser, who's also El Salvador's president Bitcoin advisor, openly bashed Ripple, its CEO Brad Garlinghouse, and the company's native cryptocurrency, XRP. He admitted that the US SEC is overreaching, but he's also of the opinion that this won't stop them from killing off XRP. He says it's a matter of when and not if when XRP gets cut down. Here you can see his tweet. Reason being, there is virtually no rule of law whatsoever in Wall Street finance for those with dollars and clout. And apparently, that's going to result in the death of XRP. Whether or not that's fact cannot be determined because we cannot predict the future. But I'm still surprised that he is making such a blatant statement that can so obviously be proven incorrect if XRP survives. On the other hand, that does mean that he's got to be pretty confident that he's predicting accurately. Are you ready for piece of news number 10? Let's take a look at Coinbase and Bitcoin's symbiotic relationship, a look into the BlackRock rally. In a recent episode of CNBC's Fast Money, Brian Stutland of Equity Armor Investments joined Melissa Lee and the Fast Money traders to discuss the recent surge in Coinbase shares, a phenomenon closely tied to Bitcoin's recent BlackRock rally. On the 15th of June 2023, the iShares unit of BlackRock, the world's largest asset manager, filed paperwork with the US SEC to form a spot Bitcoin ETF. Stutland began by highlighting a significant shift in the options market. Over the past 5 days, he said, there has been a complete flip in the puts to calls ratio, indicating a bullish sentiment among traders. This shift was particularly evident in the trading of the June 60 calls expiring on Friday. Stutland also pointed out the typically close relationship between Coinbase and Bitcoin. When Bitcoin is down, Coinbase usually follows and vice versa. However, in the last couple of months, the two have somewhat separated, and Stutland suggested this divergence might be due to potential regulatory changes on the horizon. Stutland concluded his analysis by suggesting that if Coinbase's shares go in the money on those call options and trade above the $60 level, it could indicate a well-defined head and shoulders bottom situation. This technical pattern often signals a downward reversal, hinting at potential gains for Coinbase shares. 11. The Cardano co-founder Charles Hoskinson clears the air by saying, "I never worked for Ripple." Oh, another rumor that has been going around. On Friday, Charles Hoskinson, a co-founder of Ethereum and Cardano, addressed an online rumor about his alleged past as an intern at Ripple. As it turns out, the rumor was based on a case of mistaken identity. Hoskinson tweeted, "Why do I keep seeing people claim I worked at Ripple as an intern? I never worked for them in any capacity. You're confusing me for Vitalik, who I believe was an intern." One source of this rumor was the following tweet by Poseidon, who said, "Great summary," in response to another tweet, "makes one wonder how Jed and Charles Hoskinson, also a Ripple intern, days fit into all of this." Now, that is just mistaken identity because Vitalik admitted that back in 2013, when he was living in Canada, he had tried to come to California to work as an intern for the company that later got renamed to Ripple Labs, but had failed to do so since the company sponsoring the visa had to be at least 1 year old. Boom! Rumor dissolved. Number 12. Bitcoin whales accumulated $3.5 billion worth of Bitcoin in 11 weeks. The last few weeks have seen cryptocurrency prices fluctuate, especially after the US SEC filed a lawsuit against leading cryptocurrency exchanges Binance and Coinbase. But while some investors dumped, large whales accumulated a whopping $3.5 billion worth of Bitcoin. As the price of Bitcoin floats back to over $27,000, while it's holding between 1,000 to 10,000 Bitcoin have seen a combined increase of 3.5 billion since the first week of April. These major players have not been discouraged by the bearish trend of the past 2 months, instead taking advantage of the lower prices to increase their stakes, according to Sentiment. 13. Crypto trading is an important part of the virtual asset ecosystem, according to the Hong Kong SFC chief. Julia Liangfeng-Yi said incorporating virtual assets into the regulatory system was crucial after the bankruptcy of FTX. During her speech, Leung reportedly explained that the new licensing system for virtual asset providers would ensure that investors are protected while considering the risks that financial institutions face. In her view, incorporating virtual assets providers into the regulatory system was the only way to embrace innovation and strengthen market trust after FTX's bankruptcy. Hong Kong used the FTX collapse to reduce regulatory risks associated with decentralized exchanges. In December last year, less than a month after the exchange crisis unfolded, its legislative council included virtual asset service providers in the same legislation governing traditional financial institutions. The new rules bring strict anti-money laundering guidelines and investor protection laws to digital asset exchanges looking to open a business in Hong Kong. It also introduces a new licensing scheme that allows retail investors the ability to trade virtual assets. Until recently, digital asset trading was restricted to professional investors and traders with at least $1 million in bankable assets. Well, if the SEC doesn't mind me saying so, I feel like the US watchdogs could learn a little bit from the policies and initiative being taken in Hong Kong. Piece of news number 14. A judge grants Hermes' request to halt all Meta Birkin Neft sales. The Meta Birkin creator argued that his project was protected under the First Amendment as artistic expression. However, that defense ultimately fell short. The French luxury fashion house Hermes has notched another win in its infringement case against artist Mason Rothschild after a US judge ordered a permanent injunction on all Meta Birkin non-fungible token sales. Hermes initially submitted the request to the U.S. District Court for the Southern District of New York in March to block all sales of the Meta Birkin NFTs. The defendant's entire scheme here was to defraud customers into believing, by his use of variations on Hermes' trademarks, that Hermes was endorsing his lucrative Meta Birkin's Neft, Rakoff said, adding that nothing in the First Amendment insulates him from liability for such a scheme. The Meta Birkin collection consists of 100 NFT artworks depicting furry Birkin-style handbags, with Rothschild reportedly generating more than $1 million worth of sales from the project. Look at that, it's kind of cute. Rothschild had argued that his project was an artistic expression protected by the First Amendment, in a similar vein that enabled Andy Warhol to legally make and sell art featuring Campbell's soup cans. This is what he said in a rather vitriolic tweet. Take 9 people off the street right now and ask them to tell you what art is. But the kicker is whatever they say will now become the undisputed truth. That's what happened today. He's referring to the jury. The hard facts of life, Mr. Rothschild, are that is how it works. That is, in society, how we come to decisions by conclusion of the majority. Last but not least, number 15. Binance eyes the United Arab Emirates as a focal point for future operations. Speaking to Cointelegraph, the Binance Dubai general manager Alex Jahadi said that the UAE is a prime destination for crypto businesses seeking a clear path forward and noted its friendly stance toward digital assets. I quote, Binance identified that the senior leadership of the UAE wanted to establish the region as a focal point for Web3. They're trying to diversify away from fossil fuels, and they see crypto as a great driver for doing so. Ultimately, the clear crypto regulations in the UAE make the region attractive to exchanges like Binance, which is currently wrestling with legal disputes from regulators in the US, including the SEC and the Commodities Futures Trading Commission. Binance is here in the UAE because we've been given the surety that we can set up operations and build for the future, he explained, adding that you don't want to set up where the goalposts move. For big businesses, you need predictability, you need to plan, and you need to budget. Beyond regulation, Chahadi said the influx of young people moving to the UAE could see the region more rapidly adopt crypto than other digital asset hubs. Interesting. And with that, we wrap up our newscast for this week. Despite various challenges seen predominantly in the US, actually, the global future of crypto is looking bright. Before I talk anymore, let me just round off by saying feel free to give this video that little thumbs up. Feel free to subscribe, and don't forget to be back next week so that you can find out what happens in the world between now and then. I'll be seeing you!